All right. Matt, the mortgage guy. Monday Q&A live and direct from Matt, the mortgage guy headquarters here in Folsom, California. I'm excited to jump into any and all questions you have each and every Monday at 6 p.m. Pacific Standard Time. Here's where I'm at. I'm answering questions live and direct. I don't come with any preset script or anything that necessarily I want to talk about. I got a few things that I might pull up here while I'm waiting on questions, but for the most part, we'll get 50 or 60 people on this live stream asking loan questions. No doubt the questions you have are questions other people across the country have, whether you're a buyer in process of buying, whether you're a loan officer and you've got a question and you want to run it by me on something you're seeing or something that your clients are asking you, whether you're a real estate agent, no matter what, it's just a place where we can come and crowdsource some good mortgage knowledge, some good information. As promised, whenever I don't know the answer to a question, I write down the note and I circle back the following week. So with that in mind, last week somebody had a great question, and sometimes the end of like a 12 or 14 hour Monday, my brain is not firing on all cylinders. So it's something I know, but my brain just can't find that file at the moment. So last week, the question that was asked was in regards to the automated findings. Like when you submit a loan and you get automated findings from Fannie or Freddie Mac that say approve ineligible, meaning that we can't get the loan done. Somebody was like, hey, why is it approve ineligible? That seems like a plus and a minus. So that seems like a yes and a no answer all in one. And here's what the official verbiage says, and I'll tell you how to interpret that, is that, you submit it and Fannie Mae comes back with an approve ineligible finding. The automated system is saying no to this loan. When it says approve ineligible, it means that it satisfies Fannie Mae's credit risk standards, right? So like, credit score and loan type and all that stuff is good. What is missing is it's not satisfying Fannie Mae's mortgage eligibility criteria. What that could mean, the debt to income ratio is too high. There's not enough reserves. This file needs 6 months of reserves and you don't have any in the system, or, not enough funds for down payment. Whatever it is, whatever's missing, they're saying, hey, you're missing something to have them, for our mortgage eligibility criteria, but our risk assessment, credit score, and all the other stuff in the file looks good, right? And so when you get an approved ineligible, it means like, hey, credit profile, cool. You just need to, you're missing something for qualifying here. So hopefully that straightens it up. That one was a question last week that somebody asked, and I was having trouble putting it into words. So I pulled up my notes from last week, was looking that up before I got on, and hopefully that answers your question. Zeta, hello. Thanks for always being a loyal listener, always, responding, replying on videos. I appreciate you. What kind of hard time did you have getting on? I wonder what it was. Was it your home internet or something like that? Kevin Hawthorne, appreciate you tuning in from Florida. Thanks for joining. Jorge, good to see you. Before we get busy and people start jamming questions in, I do want to pull this up because there's been so many questions around the automated approval system that I want to take non-mortgage folks through this. And I think I'm going to create a video. So this will be like a practice run for a video that I'm doing. And so anybody who's watching this either live or on replay, we get the credit report, we get the application, we get bank statements and all that stuff. And we put everything into this file and we submit it to an automated system that gives us a yes answer or no answer. That's kind of the simple way of thinking about automated findings. I just wanted to show you a little behind the curtains of what that looks like, right? So a lot of lenders nowadays have something called dual underwriting or one-click AUS. Basically, you can run Fannie and Freddie, those two different systems at once. And let me show you what it looks like when you run that. Let me see if I need to zoom this in even more. Probably. That's a little small, huh? So let me get off of the... I've got the pen right here. I don't know how to get off of this pen. There you go. All right. So this is that dual AUS. AUS is automated underwriting system. On the left, desktop underwriter. On the right, loan product advisor, otherwise known as Freddie and Fannie. Let me zoom in here. And this is like a quick little like snapshot of the findings. Desktop underwriter, loan product advisor. The result, approve eligible on both of them, right? Approve eligible here, approve eligible there. Appraisal waiver eligible. Nope and nope. And this one, I'll tell you, it's a 10% down, I believe. And so not likely going to get a 10% down appraisal waiver on a purchase. Do we need tax returns? Nope. They're W-2 employees, so none required, none required. Months of assets required. Now, this is where seeing these side by side is cool because you can look at it and go, okay, if we go DU, we need 2 months of bank statements we're going to have to put in the file. If we go LP, we only need 1 month. So maybe we'll submit it here, right? And so this is a quick side-by-side view. And then we have something called easy findings, which basically says, hey, you're submitting this file. Here's the stuff you're going to want to put in this file. Here's the stuff the underwriter is going to ask for. You need $54,873 to close that transaction. Available funds are insufficient by 20 grand, meaning like we've put in there bank statements and assets of only whatever 54 minus 20 is, right? Like 34 grand in assets. You're going to need an extra 20 grand. You're going to need to show the earnest money deposit, the deposit that the borrower is going to put into title company. You need to show that. There's something in here about referring to Fannie Mae letters about the impact of COVID-19. The underwriter, truth be told, is going to add those conditions later if there's COVID-19 overlays. Really, most lenders don't have those overlays anymore. So this is probably going to get phased out of their automated underwriting system. Unexpired picture ID for all borrowers. Letter of explanation from all borrowers for credit inquiries. You know, why did you get your credit pulled at Chase Chevrolet in July of 2021? Is that a new car? Why did you get your credit pulled here? Just the explanation, right? Income for, and obviously I blacked out the borrower's name, but our borrower, including bonus overtime income, must be supported by a pay stub and W-2 covering the most recent 2-year period. So we're going to need a recent pay stub and then 19 and 20 W-2s. I think most people know that. A 4506T, which is a form, an IRS form that the borrower needs to sign. Some title stuff. Fully executed purchase agreement. That's the purchase agreement. Homeowners insurance stuff. Mortgage insurance required. True. And appraisal. Pretty straightforward stuff, right? So it's literally saying this is a proof file, and here's what you're going to need. And this is just the same thing for LPA. Very, very similar in the stuff needed. Here's where a great mortgage team, whoopsie daisy. I just realized I didn't. Or something that I didn't block out there. But this is, I just wanted to kind of run through that so people can see what it looks like. But a experienced mortgage team, when they take your file, before they even submit it to a lender, is going to look at both of those, DU and LP, and say, listen, based on what we're seeing in the findings, we're going to submit it LP. We only need 1 month of bank statements, or we only need 1 year tax returns and not 2. And we want to do that because you've been self-employed for 9 years, so we can do that with LP. And your 2020 was better than your 2019, so we want to just provide 1 year tax returns. Whatever it is, knowing how to read that, and it's not necessarily always the loan officer, right? You might have a really good operations team, a really good processor. They can read that and say, this thing's not even going to approve DU. We got to flip it LP. Or this thing is going to be a cleaner, easier file to push through and get to the finish line, doing one versus the other, Fannie Mae versus Freddie Mac, or vice versa. So anyhow, just showing you guys the behind the scenes, some of the nuts and bolts of what's going on in the mortgage world. So anyhow, that's that. Linda Gomez, hello, hello, hello. Jason Hibbert, good evening, good evening. Zeta, good to see you here. What do you think the Afghan refugees will do to affordable rentals housing here if they're already affordable housing storage? I don't think that it's enough of a number to affect rental prices. I mean, spread across multiple cities. I mean, I think that like the mayor of my city of Sacramento talked about housing refugees and helping with that. I don't know. I mean, we're having issues in Sacramento as well, housing people who are being evacuated from fire areas. And you know what? Thinking back, you know, it's supply versus demand. So whether it's, you know, refugees coming from Afghanistan, or whether it's, you know, evacuees coming from a place that's on fire, it's all just like, how's it going to affect the housing market? Looking back on, what was that fire? Was it Santa Rosa? I remember that affecting rental prices in the short term. It wasn't a long-term thing though, right? They were, you know, displaced or looking for somewhere to rent because they'd been evacuated or a house had burned down in Santa Rosa. Was that 2018, 2019? Anyhow, I don't have a good, clear answer for you, but I know in general, rents are bonkers. And a lot of people like to talk about housing because it's like housing prices are 17% up. It's crazy. It's unaffordable. What are people going to do? Nobody can buy a house anymore. I mean, similar type of, you know, upward pricing pressure is happening in the rental space, you know, and this displacement from, you know, natural disasters like fires and floods and whatnot exacerbates that too. So I don't know. I think is my final answer. All right. BOJIM. Thanks for joining. Yeah. For some reason, like I don't always do that on every video, but on every like live. All right. Speaking of that, I still got to read McConaughey's book, Green Lights. I haven't read it yet. I heard it's good, and almost picked it this month for book club with some fellow business owner buddies of mine, but instead we picked a different book. The book we picked was, I got to remember, I got to pull up my Audible, Building a Story Brand by, who's this guy? Donald Miller. It's a good one. Yeah, I mean, it might not be such a, you know, if it's a few thousand here, a few thousand there. I think I agree that it won't make much of a difference. No problem, Zeta. Question, can I buy a secondary property if I don't have a primary one yet? That's a great question. You can definitely buy an investment property, but your specific question might be like, can I buy a second home when I don't have a first? Man, you guys and your questions. Second home. I think I already got stumped. We're only 14 and a half minutes in. You did it without first. I would think like it's kind of like a vacation home, second home. But can you do that and say, hey, this is my second home when you don't have a first home? Maybe you rent in the middle of the city and you're buying a second home up in the mountains. My guess is yes. My true answer is not sure. But that's the beauty of this. I'm going to learn something. I'm going to come back next week. I'm going to have the answer. So I hope to see you here back next week. I'll start the live off with answering that question with a for sure answer. Oh, takes the mystery out of lending process. Thank you for taking the time. Appreciate. No problem, Linda. I enjoy the heck out of this stuff. One thing I would like to mention, since you're talking about education and you're talking about, helping folks out, I have got a course that I put together, 12 videos, and I kept having people tell me you gotta put this course on Teachable. So it's there. That's the link to my school, they call it. And there's a course for $97. If you're so inclined and you want consolidated 12 really educational videos on loans, the loan process, how mortgage rates work, whether or not you should refinance, just a lot of good stuff, right? You could probably go to my channel and sort through 475 videos and find some good ones. These 12 are my current knowledge, right? A lot of those videos I put out 3, 4, 5 years ago, didn't know as much as I know now. So put those 12 videos together. The plan is everybody that enrolls in that course is going to also be enrolled in some sort of monthly mastermind where starting next year, I can get on a Zoom call, answer specific questions in detail for folks, maybe even strategize like investment property purchases and things like that. So I'm looking forward to it. I was pushed by a friend of mine who said, you got to put together a course. And when I did it, I inserted it into his course. If you don't know, or you haven't heard me on One Rental at a Time with Mike Zuber, every single Wednesday, me and him are shooting videos and it's going on his channel. The name of the channel is One Rental at a Time. Inserted the course into his course, which is on investment property or rental property investing. Got good feedback. And so now this course is available just as a, one-off through this link. If you're interested, I'd love to get some feedback on what you think about it, what I can do to make it better, what you think I missed on, what you enjoyed about it, all that stuff. I'm all about feedback. So let me know what you think. Jorge, thank you for the super chat. I appreciate it, my man. 660 median score. Better to go FHA or conventional. Can you do 5% down? If you can do 5% down, I bet you right now conventional is going to look better. If your two options are 3% conventional or 3.5% FHA, you might be better off FHA. Another consideration is going to be if you are in a market that's super hot. As I'm answering this, I'm pulling up a pricer. If you're in a market that's super hot where you've got realtor partner telling you we can't submit FHA, no chance, which in my market for some areas, even where it's slightly better FHA for a buyer, I've got realtor partners telling me not for this offer. We're not submitting FHA. It's got no chance. So yeah, that's my thoughts on that. Let me know if you have 5% down. Right now I'm pricing 5% conventional versus FHA. Holy moly, the rates on FHA are low. Like 2.25 low. Poof. Holy guacamole. All right. Even with 5% down, you're better off FHA with 660. Dang. I'll tell you what, here's some quick numbers. $400,000 purchase price, 5% down. The rate on FHA without paying any points is 2.25. That's $1,477 principal and interest, and then you're paying $250 a month in mortgage insurance. So that's $1,728. You probably have $400 or $500 a month in taxes and insurance, depending on where you're at, right? So it's $2,200 payment all in. We'll call it $475 in taxes and insurance and $2,200. Now, conventional, the rate is like a full percent higher. I mean, 660 conventional is not too excited about having you at their party. So 3.25, 1653, and the mortgage insurance is 373 a month. It's literally 50% higher mortgage insurance. So that's 2027. You add the 475 in tax and insurance to that, 2,500. So $300 more per month. Whew. Yeah. Way better FHA for 660. I feel like this ebbs and flows. I feel like it's not like it wasn't that big of a disparity. I bet you 10% down. It's different. If you're back and forth between FHA and conventional and you're 5%, or God, it's going to look disgusting if you're 3% conventional. So I think we answered it there. Thanks again for the super chat, Jorge. Appreciate it, man. The $2 make you holla. Answer any question you got. How long does it take to get answer from bank after mortgage broker has all my info? And does broker help in finding first-time home buyer programs? Brokers do all that. Once you have an application, docs, everything in, every business model is different. But for the vast majority of them, I think they probably operate similar to me and my team. Within 24 to 48 hours of getting all that stuff, we'll have an answer for you. Pre-approval, up to this amount. Here's what it looks like. Schedule a call to ask questions, provide you with some documents on what the loan's going to look like, et cetera, et cetera. It's 24 to 48 because when we've only got 6 or 8 to process, we get it to you within 24 hours. If we've got 17 people all got their applications in over the weekend, it might take us until Tuesday at 2 p.m. to get back to you. So that's that. And then do they help in finding first-time home buyer programs? Sure. And those are different state by state. The only thing that the different states have in common is that I'm going to find a nice way to say this. Most of those programs are not your friend. Most of those programs are, it's a nice way to put this. Like payday loans, expensive, not good long-term investments. All right. Uruguay submitted an offer tonight. You are very welcome for the mortgage tips. More than happy to help. Good luck on your offer. Everybody right now for Uruguay, however the heck you say it. Let's have a moment of praying to the real estate gods. Let this offer get accepted. It's hard out there. I don't know what market you're in, man, but best of luck to you. If I clear up my credit cards with money from May savings, will it cause a red flag, being a random large transaction, trying to get the best interest rate while it's low? No, if you pay off your credit cards, what they will do sometimes is they'll see the credit cards being paid off, or it'll show a $4,000 balance and then there's no balance the next month. You can just show them and look, it came from my savings, came from right here. So that's not a big deal. Where you might have an issue is it might take a little while to report and actually reflect on your credit score. I don't know if you're trying to buy or if you're trying to refi, but what I would say is be careful chasing a higher credit score, because sometimes next month's rate at 720 credit score is worse than this month's rate at 706, if you know what I'm saying. What's up, Doug? Yeah, I think you're responding to the one we talked about earlier where seasonal home, second home, it's called a bunch of different stuff. It's got to be in a market that's somewhere where you would go, on vacation or as a second home. It can't be like in the middle of the city. And for sure, a very popular loan where you can put 10% down and the terms are very similar to a primary residence. What the question was and what we're going to solve for next episode, next Monday, is whether or not you can do that without a first home. So let us know. Did you do that without owning your primary, or you're just renting where you're living and working, and then you did that separate? I think you probably can, but I'm sticking by. I'm not sure. Oh, thanks. Nice haircut. Look at that. I'll tell you what. I'll tell you guys the secret. There's a place by my house. It's called Expert Haircuts. $9. Maybe it's 10. Maybe it went up to $10. $10 haircuts. They do a bang up job. Sometimes good, sometimes not. They do it really quick too. Like there's signs up. You can't pick who your barber is. You just sit down, shut up, and they cut your hair. Great folks though, for $10. Me and my boys went and got our hair did. They're going back to school on Thursday. So thank you for the haircut compliment. All right. Regarding secondary property without primary, I want to buy a vacation home near my parents. It's cheaper there and I can buy it now. Where I work, I need more time to buy. Okay, cool. Yeah, I think you can. I'm going to confirm. But, I mean, if you guys want me to text my processor, then fine. I'll text him right now. Can you buy a second home without owning a primary? All right, here we go. Text my processor. We'll see at 6:30 at night. If he gets back to me relatively quickly, then we'll keep letting him process loans. If not, fired. Is it possible to waive escrow? I can pay for the insurance and tax myself. 100%. Some lenders will have a overlay. my processor just texted me back, so that's a great question. See? Oh, and the answer is yes. I just did one. See that, guys? Real-time answers. I didn't know it. I got the answer to it. So there you go. Oh man, I even got fellow loan officer buddies of mine text me that you can do it. Thanks for watching, guys. Thanks, Tom. Appreciate you, brother. So cool. All right, back to you, Jason. Is it possible to waive an escrow? For sure it is. And a lot of people do this. I have no idea why. I don't want to be responsible for paying my tax and insurance separately, but the only thing to look out for is some lenders will have overlays or they'll have rules like you can't do it above 95%. But if you're, putting more than 5% down, or you've got 20 or 30% equity and you're doing a refinance, for sure you can waive the escrows. And for anybody who's unsure of what that means, you're paying the mortgage company your principal and interest. The tax and insurance part of it, you're going to pay that separately. You're going to pay the county twice a year for your property taxes, and you're going to pay your homeowner's insurance directly to them. I personally have enough shit to worry about. I'm not going to waive escrows. But if you want to, yeah, all good. Oh, you know what? Linda, did you post the link to the course in the chat? Right there. Boom. If somebody from tonight buys the course, let me know. Send me an email. I'm gonna send you a swag bag. I'll send you like a Yeti. I'll send you probably $50 worth of swag for buying a $97 course. Yeah, I posted that in the comments, Linda. So if you want to check it out, I'd love some feedback. I'm fairly certain I have to offer a 100% money back guarantee. So if it sucks, send me an email. Matt, this sucks. Didn't help me at all. You're an idiot, and then get a full refund. And no harm, no foul, except for the time you lost, I guess, watching it. But yeah, check it out, because I did my best to put together 12 videos. And the whole goal is to simplify a lot of things that aren't so simple in mortgage, and to help people save money, how to read a loan estimate, what, how interest rates work, whether or not you should refi, stuff like that. In my opinion, it's a half decent course. So check it out. It would be cool. The link is in the comments to the course. Okay. I have a trivial new construction question. I would appreciate your point of view. My builder is offering washer and dryer at the same rate, 2K as market. Oh, it's a good idea to add them to mortgage. Like they're gonna roll it into the purchase price. That's interesting. I mean, I think you're right, and that's kind of trivial. It's like, some people are like, you're never gonna finance that $2,000 over 30 years. That's silly. That's ridiculous. I personally be like, fuck, why not? I guess it's up to you. If you're tight on cash and like allowing that to kind of get rolled into your home purchase makes you have a little bit more buffer in savings, a little bit more, sleep easy at night, then go for it. Why not? All right, Linda, it's in there. It's in the chat. Thank you. Thank you. Jorge, 5% down. Yeah. So FHA versus conventional, we just priced it out. Oh my gosh. Conventional looks ugly. Do FHA, have a plan for refinancing out of it in 2 to 3 years. Once your credit score has improved and you have some more equity. I think that's it. Jorge, you came back. You came back with another $2. Cool, man. I appreciate you, brother. Thanks for the super chat. Jason, just realizing cash out will increase my monthly mortgage. Is there a calculator in cyberspace that compares cash out refi to home equity and FHA to conventional, since you bring up those rates? There's probably a calculator somewhere out there. If you're buying and you're looking at conventional versus FHA, whoever you're working with should be able to put those side by side and show them to you and tell you why one makes more sense than the other. If you're refinancing right now, I don't think it makes sense for hardly anybody to do an FHA refinance. You've got so much equity that it's silly to pay mortgage insurance on a house with 20, 30, 40% equity. So you wouldn't have to compare those. But if you want to compare cash out refi to a home equity, good question. I wonder if my buddy Kyle Seagraves has something. He's got some cool stuff on Win the House You Love. I don't know if he has something like that, like cash out versus HELOC, but maybe you get a quote from a lender, look at the cash out refinance, say, okay, I'm gonna get $55,000 in cash out for my remodel, and it's going to make my mortgage payment this, and then compare that to a rate and term refi or leaving your mortgage alone and then doing a home equity line of credit and pulling that much from the HELOC. One thing to take into consideration, a lot of times HELOCs are adjustable, and that's the big con for a lot of people, is they don't want to pull $55,000 out, have a plan to pay it off, have something in life change, and then go, oh, whoops, have it start adjusting, 4% to 5% to 6%. Now all of a sudden, 6 years from now, they got a $50,000 balance with a 7% home equity line of credit. Like that can get nasty, nastier than like, oh, I did a cash out refinance. I got a 2.99% on all the money. It's fixed. It's never going to change. All right, Jorge. True. Like button is free. Let's get up to I don't know, 100 likes. If we get to 100 likes, Irwi is going to get his offer accepted. That is a fact. Irwi, get in here, bro. This I can't read, but I think it says something along the lines of, Matt, you're the very best mortgage broker I've come across. Thanks for all your help. You did great work. We loved working with you and your team. Have a blessed day. That is my only home is classified as seasonal. Only counts as the primary if I telework from this location. Okay, cool. Yeah. So I think I got some confirmation from my processor and from my buddy Tom. All right. Yeah. My processor said the underwriter had to trick the automated underwriting system, since technically they were first-time home buyers, but buying a second home. So yeah, it's possible. Linda, sweet. Sign up. I'm gonna once you do, I'm gonna follow up and get your address. I'm gonna send you some swag for being an early adopter. And then next year we'll get into like masterminds and monthly Zoom calls. It's gonna be some cool stuff. My plan, as is always the plan, is to provide way more value than is asked for or needed, right? Like if you sign up for a $97 course, I want to provide you thousands in value. So appreciate you, Linda. Thank you. All right. This is a common question. This is happening more this year than ever in the history of loans. That is my one man's prediction about, I just did a cash out refinance, and how long do we have to keep our house before moving to another primary? I heard that was required. Well, when you do a refi, do a cash out refi, you're attesting to the lender that you plan to live there as your primary residence. That's why it's a primary residence refi, and you get the terms of a primary residence. If you turn around and go try to buy a new primary, one way to look at that is it's loan fraud. Another way to look at it is, plans changed. And so I don't want to get too long-winded on this, but if plans legitimately change, do a cash out refinance, you're like, okay, we're going to do an addition, and then we're going to, remodel the master bath, and this is going to work for our family of 5. And then you're like, oh, like 4 months later, wifey's pregnant. That addition was going to cost 110 grand. I thought it was going to cost 45. We're going to have to sell this and buy something new, or we're going to keep this as a rental and buy something new. You can write a letter of explanation, which is what the lender is going to want, to say plans changed. And then you close on a new primary 6 months later. In my experience, you're not going to jail, but you signed something saying that's going to be your primary. If you're trying to game the system and do it as your primary, and then I think your second question is use some of that as the down payment on the next one, lenders are going to question it, is what I'll say. So maybe chill for a few months. That's my best advice. MD, good question. If mortgage rates go up, the Fed stops buying mortgage-backed securities, the Fed funds rate gets ticked up a little bit, and we see higher rates next year, it should have an effect on prices. And when I say should, you've got to look at like supply versus demand, where if supply is here and demand is here, we're in a market like we're in now. We're seeing 15, 17% year-over-year price appreciation. If the demand goes down because rates are a little bit higher and we get some more houses in the market, it might mean like, okay, this is a small imbalance. Home prices go up by 3% instead of 17. That seems a more likely scenario to me than like rates go to 4.5 and nobody wants to buy a house. Rates go to 4%. There's still a lot of demand. More people are selling, and some landlords are tired of California's laws being a landlord, and they list their houses, and now there's, more listings. Maybe you see a flatter market. I don't think there's a very good likelihood of a scenario where home prices fall off a cliff. I mean, little chance, snowball's chance that they fall off a cliff. Slight, like, I can't even see a scenario where they go down 15 or 20% either. I just don't see it. I just see too much stuff propping up the demand side. The advantage, they're going to install it for you. That's one thing off your plate when it's time to close the house. I personally, for that reason and that reason only, like if I have the option of like $2,000 rolled into mortgage, or even if I could go get it at Home Depot and I got to pick it up or have it delivered, I got to connect it. your time is worth something. Value yourself. Just go with it. That's what I'd do. All right, Marco Polo, thanks for joining. I enjoy Mike Zuber as well. Every Wednesday, if nobody has checked out One Rental at a Time, great dude, great channel. He's got a great book. If you like real estate investing, he does a daily market update where he's talking about, not just housing, but also the stock market and also the economy and all the other stuff. Check out Mike Zuber, One Rental at a Time. He's got multiple guests that he interviews throughout the week. Me and him do stuff on Wednesdays, but throughout the week, he's got other great guests that he has on too. So the guy's probably putting out 25 videos per week and a daily market update. So it's good stuff. Thanks, Marco. Thanks for stopping by. My buddy Joey, how you doing, my man? All right, you got good news to share. Got somebody who's getting started in real estate investing, qualified for Home Possible. If he's qualified for Home Possible, why the heck would he be talking to B of A? He is set up for getting closing costs covered by B of A. Got his offer accepted. Didn't I give you this advice to have your mom start dealing with real estate investors? Is it me to thank for this? Or no, it's a buddy of yours. You hooked up with your mom and they were looking at rental property. It was all your side. Nothing to do with me. But that's awesome, man. That's cool to hear. And I think if I remember correctly, you're a college student, so your buddy's probably a young college student too, and already getting in the real estate game. That's good to hear, man. It's good to hear success stories like that. Whereabouts are you at? Like Oklahoma, I think. All right. Is he getting like a lender credit by taking a higher rate, and that's how they're covering the closing costs, or it's some sort of down payment assistance? I'm curious. And you're in your market, is Bank of America like a lender that people use? Is there no good mortgage brokers around? Del J, HELOC. That's a good question. And whenever somebody comes to me for a HELOC, I refer them to a small community bank. A buddy I know who runs a small community bank. They have great HELOC products. In general, from what I've seen, and this may be different in different markets, me as a mortgage broker, there's not many products that I could broker that make a lot of sense. Like a community bank or a small credit union that wants your banking business and wants that other business is going to offer you way better terms on a home equity line of credit. So go to them. I know credit unions in my area have good home equity lines of credit, and small community banks. Those are where I would search for those. Definitely not with a mortgage broker. It's not our cup of tea. All right. Should I use a builder's preferred lender or your own mortgage firm? This is a really common one as more and more new build stuff is going on. And I talk to people probably daily on the same subject. They're going to require you 9 times out of 10 to get pre-approved with their preferred lender, which is fine. I understand from their point of view, they want somebody who's like tying up this house to know that they're going to be able to close on it. So you got to get pre-approved with them. Sometimes they offer an incentive. If you use our preferred lender, you get the $3,000 in credit, you get $5,000 in credit. The best piece of advice though is talk to a local mortgage broker and just compare it and ask the broker, hey, this builder's lender with their $3,000 in credit, is that better or worse than you? And I've given hundreds of people advice, and it's varied. Sometimes it's a friend of mine that really wants to use me, and I say, listen, the builder's offering you $7,500 in credit. Even though I'm $5,500 better, when you account for that credit, they're $2,000 better than us. Use them. We can help you refinance down the road. Other times, they're offering a $3,000 credit, but we're $6,000 better. Net $3,000 winner working with us. And as a buyer, rest assured, you don't have to use the builder's lender. You can use whoever you want. That's your right. So yeah, that's my advice there. Get pre-approved with the builder's lender because you're going to have to. Cross check it with a local mortgage broker. Definitely a local mortgage broker. Online broker, if you're talking about like a big like fintech company, I just can't tell you how many times I've heard people with just horrendous experiences. They talked to me and they were 2.5 months, trying to get through a refinance, and the online lender just couldn't tie their shoes. Which makes sense when you got call center folks. A lot of them aren't even licensed. They don't really know how to spell mortgage, let alone get one to the finish line. So, gonna be a local mortgage broker. And you know what? Speaking of that, where's it at? Greatmortgagebroker.com. Can I put that in the? How do I highlight that? If you're outside of California, if you're in California, you just want to contact me because my team is just sitting by, just waiting to give you great service. But if you're outside of California, you can go to thisgreatmortgagebroker.com, fill out this quick little 6 questions, and bam, on your way, getting pre-approved. All right, another shout out to Mike Zuber. Marco Polo's talking about his book, One Rental at a Time. Highly recommended. I agree. Super digestible, super easy. Trying to build a new construction home. Build or buy? Oh, I guess you're not building it. They're building it. You're buying it. I don't know. It's getting late. I've been here too long. College professor and attorney. Okay, yeah, $7,500 in closing costs. That's pretty good. Yeah, I mean, maybe you got a good B of A loan officer. If I were your mom working as a realtor, I would tell her, like, talk to a local mortgage broker and then have both those relationships. You got the B of A loan officer, you got the mortgage broker. One's going to do some stuff good, other's going to do some stuff good, and she can use them both. And over time, she's going to find out, like, holy shit, broker closes faster, cheaper rates, and an easier process. Maybe. I'm just saying maybe. I don't know. Maybe not the case. Maybe the guy at B of A's crushing it. Not very likely. Mark McDonough, what's up, bro? I was spying on you. Don't worry. I went and checked you out at 5:30 when you were live. Talking with my boy Aaron. Good stuff, man. Good to see you. Hope all is well. Hope you're not getting bullied online. You know what I'm talking about. There you go, Joe. Smash the like button. You smash it too, Mark. We got to get up to 100 likes. If we get up to 100 likes, then I'm probably pronouncing it wrong. Offer is going to get accepted. Just submitted it tonight. All right, VQuez. Good to see you live as well. Thanks for joining. Go ahead and pop a question in there. Whatever question you want to ask. I mean, no question off limits. Anything you want to know about mortgage. There's got to be some stuff. What's on your mind? I've been seeing some more and more weird stuff. I've been having buyers, sellers, refinancers getting COVID, tenants not allowing appraisers in, tenants pulling guns on home inspectors, all kinds of crazy stuff going on. So you guys got to have questions. What's going on in your market? Maybe it's time to pull the crowd. What's the latest and greatest in your market? Are things slowing down because people are going back to school? I feel like I might have felt a twinge of that, but it's still competitive AF in Sacramento and surrounding. Mark knows. Mark does all kinds of Sacramento real estate stuff, and he knows Sacramento is just bonkers. Everyone wants to move to Sacramento. This is a good question, Joey. Do I think 40-year mortgages will be a thing next year? I don't think so. It will for sure increase demand though. So if lenders did it, it would have to be here's something I could see, Joey, if you want me to look into the future. Home prices continue to go up because there's more demand than supply. And economists talk about no inflation and transitory, but I think they're high on drugs. I think like everything's getting more expensive. Assets are getting more expensive. When you print trillions of dollars, like it just makes sense for things to get more expensive. So as homes, especially for the entry-level buyer, start to become unaffordable to me just means they can't qualify for the $450,000 house because the monthly payment doesn't fit into their DTI requirement they need. Then maybe the fix is to say, okay, 40-year loan. Now somebody who couldn't qualify can now qualify. And here's like the moral question, right? Is it better or worse to give somebody that longer term with a smaller payment? They're paying more interest, but they're in the game. They're able to start. Some people who weren't going to be able to buy are able to enter, and you know all the stats, right? Like homeowner versus renter, like net worth. When you've got an administration that's talking about like trying to help like the historically, disadvantaged folks, like the 40-year mortgage, I think would do it, right? And maybe, you know what, Joey, here's my brilliant friggin' idea I just came up with. What if like 40-year mortgages were available, but only for people that had an income that was 80% of the area median income or lower? Some people look at it and be like, maybe that's predatory. Maybe you're like putting these people in these longer terms that, are gonna, but it can't be looked at like that because a 40-year fixed rate mortgage is light years better than down payment assistance from the state of California, where they charge you extra and they put a second and third on there that allows you to not refi. So that's it, dude. I'm gonna say right now, 40-year mortgage for folks of the lower income spectrum to help them qualify to get into a house, because that's the secret friggin' sauce. If you want to talk about like home ownership rates and, historically, like not even necessarily like people of color or Hispanics or something like that. Maybe it's just like low income folks haven't been able to get a house. Well, offer them a product that allows them to qualify, right? For people that are of a certain income demographic. I don't know. If I was in charge, I'd be making shit happen. That's for sure. But I'm just little old Matt the mortgage guy. Yeah, I mean, maybe it's not a good idea, but maybe for some people, like they've done down payment assistance, and it's like if they couldn't have gotten to a house in 2016, were it not for the down payment assistance, then are they better or worse off today? Like 5 years later, they got 150,000 in like increased net worth because their house went up 150 grand. That person who was either like down payment assistance or not buy a house, or that person that's 40-year mortgage or not buy a house. Which one's better off? I think home ownership and the, home ownership to net worth that we see as a like direct indicator of people that are homeowners have a net worth that's 30x what a non-homeowner's net worth is at the end of their working years or whatever the stat says. I don't know. Demand features are not very common at all. You know what? I don't look at down payment assistance programs that often, but I think they're like 1/4 to 0.5% higher. That, and there's fees. And the worst part, Tara, I mean, and this varies from state to state, so it might not be the same in whatever state you're in. But the worst part for me is right now, 2021, when I'm trying to do a refinance for someone who got down payment assistance last year, we've seen crazy home price appreciation. But last year they paid $400. They got down payment assistance for not just the down payment, but also closing costs. So they got a first and a second and a third. And those second and thirds are placed on the back to help with the down payment and the closing costs. So now they owe $420,000 on a house that they bought for $400, even if it's gone up to $432,000. It's gone up 8%. They can't refinance. They're not in a position to do so. And if they do, they've got like such little equity that the mortgage insurance is super expensive. And so it's not a good place to start. Starting off underwater, no bueno, in mi opinion. Steven Gutierrez, who normally buys these mortgage-backed securities when the feds are not buying them? Institutional investors, I think. It's a good question. I really don't get super involved in the back end, all that mumbo jumbo, but that's a good question. I think it's mostly institutional investors and, probably like funds or, it's probably part of a big portfolio for like fund managers and stuff. I don't think there's very many, mom and pop Robinhood investors that are like, ooh, I'm gonna buy me some mortgage-backed securities. Oh, this was in response to, you're in North New Jersey. The market's crazy. There are more houses to buy, but the prices are higher than a few months ago. I wonder if with those more houses to buy, if they're priced high and they might be sitting a little bit and they'll come down a little bit. That's what we've experienced in some parts of California, where it went 400, 410, 420, 430, 440 every month. So it went up. And then like June, July, August, realtors kept going bing, bing, or sellers, whoever was, in these conversations about price, and they pegged it at 460, and they realized oh, it's not going up 10 grand a month like it did for the first 4 months of the year, 5 months of the year. So now they've got to come back down, and now it's a price reduction to 445 from that 460 starting point. Be interesting to see if you see any of that in New Jersey. I've been waiting for my lender to give me a partial claim. It's been over 6 months. What can I do? Blow them up. Ask them what's going on. I'm guessing this is for forbearance. Yeah. I'd call them every day. Light a fire under them. All right. Joey G is asking you guys to smash the like button. It's the least you can do. It's free of charge. There's good enough information being shared that folks are sticking around. So with that, smash the like button. This is a good one, Zeta. I do not believe so. Age cap. I feel like I've done mortgages for people in their 80s. And if you qualify, you could be 82 and write a 30-year mortgage, knowing that the odds are you're not making it to the end of that mortgage. You're not making it to 112. Most people aren't. So I don't think there is. That'd be interesting to look at, right? Can you do a cash out refi at 91? I think you can. I don't think there's an age cap. Is a primary home the same as FHA? I refied on my house hack 3-unit in January. Think about moving out and doing it again. Do you have an FHA on that first one? Because if you do, FHA can only be on your primary and you can only have one, meaning you can't move out of that, buy something down the street with another FHA loan. You'd have to do a conventional loan on the second one, unless you bought FHA, refinance conventional. Now you can, buy FHA on the next one. We can only do one FHA at a time. Hey, Nicole, this is going to vary based on like your credit score and some other stuff, but just generally, like you want to have your DTI under 45%. Most of the stuff I'm seeing get approved is sub 45 debt to income ratio. Are the loans different for 5 or 6 units? Yes, they are, Jason. Once you get above 4, 1 to 4, residential loans, Matt the Mortgage Guy territory. 5 units and above, commercial loans. Totally different monster, totally different underwriting process. You want to talk to a commercial lender. Those, banks, small community banks, again, sometimes have good commercial departments. I guess it's probably different in different parts of the country, but around me, I know a couple commercial lenders that are really good. And the difference there is it's not going to be based so much on you, your credit score, your income, all that. It'll be more based on the asset. So they're going to look at the rent roll and the expenses versus rent and all the stuff that goes into like, how is that property performing? And then based on that, they're going to say, all right, you got to put 20% down, 30% down, sometimes 40% down if that's what it takes, for them to feel the warm and fuzzies about you paying that thing back. Do you think house prices will ever go down again? This is a good question. It's a legitimate question. Like, will home prices ever go down? And it's funny because I had somebody on, I was talking to them. I can't remember where the conversation was being had, but they were saying, it's funny how people talk about real estate being cyclical and, what goes up, what must come down. Like, really, the only time we've seen home prices truly decline is 2008. If you look at like historic home prices for 100 years, there's not really other times where we saw a dramatic decline in real estate prices. And so what if they don't, right? What are all these people that are standing on the sidelines like, I'm going to wait? I mean, I have people that sold in 18 and 19. We're like, I'm going to sit on the sidelines, let the market tank. I'm going to come back and buy cheaper. Like those people are crying themselves to sleep. AB, thanks for joining us. How do you evaluate self-employed people? I was pre-approved for conventional with $100K in savings and $89K adjusted gross income, but my approval seemed a bit fishy. I'm not even 2 years in business. Well, I can tell you with absolute certainty, you had somebody give you a half-ass pre-approval. If you go get in contract and put down an earnest money deposit, you are going to get slapped in the mouth and you're going to lose an earnest money deposit. So under 2 years of self-employed, very unlikely that anybody can give you a pre-approval. Well, someone can give you a pre-approval. They did. But here's the thing. A pre-approval is basically someone saying, yeah, we can get a loan done for you. And I can count. If I had $1 for every time somebody had a pre-approval from Quicken Loans or some other half-ass lender that couldn't get to the finish line, I would have already retired. I would be on a beach with the wife and kids by now. So my best advice to you, talk to somebody who's going to do a thorough job. You want a full application. You want your credit pulled. You want the last 2 years of your tax returns being analyzed. And you want to say like, give me some concrete, yes, we can get this loan done. Because if you haven't been in business for 2 years, you don't have 2 years tax returns. If they're trying to qualify you based on like you had 89 in adjusted gross income in 2020, but nothing in 19 because the business is brand new, it could be some problems. I forgot. All right. Good question. Is DTI based on your monthly payment or your total debts? It is based on your monthly payments on your debts, right? And so we pull your credit. Your student loan payment is $124 a month. Your car payment is $330 a month. You've got, some other revolving credit card debt where the minimum that shows up in your credit report is 50 for one card and 75 for another. That's the stuff that gets calculated into your debt to income ratio, is the monthly payments that show up on your credit report. All right. What documents do underwriters need for loan payment for student loans? And then your backup. Number 2 question was, which student loan repayment is better for conventional loans? I think there's a bunch of them. I'm not a student loan expert, but you've got like an income-based repayment plan. And, sometimes that is a lower payment for you. And as long as you can show that, like that thing, what was the test? There's some like test where if fully amortized, the thing's going to pay off, then you can use that payment that shows up on the payment plan. What do I think about reverse mortgages? I think they've changed a lot where they're not as bad as they once were. They kind of got that stigma. I think it's a niche product that works well for some people. And I mean, everybody's got different goals, needs, life circumstances. I know some people that did reverse mortgages and their whole thing was like, I'm trying to live the most comfortable 8 years I can. My heirs don't need anything from me, so I'm not worried about the mortgage eating up my equity. I just want to live comfortable for the next 8 years. And, so maybe for those people, it's a good deal. Or it's something that makes sense, right? Not for everybody. But I probably shouldn't speak on it. I'm not a reverse mortgage expert for sure. How close are you to 2 years, AB? You had 55K in the first year and you had 89 in the second. Because then they can take an average of those 2 years, but more likely than not, they're going to want you to be in the business for 2 years. This is not appropriate verbiage here. And if I had a moderator, they'd boot you. But I don't have one yet. I'm a small timer. How do QM and non-QM loans work? How do you qualify for them? Non-QM is basically, it doesn't fit into the conventional loan type bucket, conforming buckets. And so they can make their own rules being non-QM, right? And so there's bank statements loans, there's debt service coverage ratio loans, and you qualify based on the rent of the rental property versus the payment, or you qualify on your last 12 months or 24 months of bank statements for the bank statement loan. There's different ways to qualify for those non-QM loans, where the traditional stuff, the conventional, the FHA, the VA, and that, like it's all like ability to repay. You make $6,000 a month, you got 400 in debts, and you've got a $1,700 payment. What's the ratio? Do you qualify? Yes or no? Like that's the basic model for most loans. And then you've got the non-QM stuff that's just play by our own rules, offer creative ways to qualify you without having to look at, income and whatnot. So that's the gist of it. I have one video out there on non-QM loans that you can take a look at. They're a niche product that work for some folks. All right. Tara is under contract. Congratulations. Good to hear. DTI is 16%. It goes up 20. Well, underwriting not approved me. I spent 300 on credit cards. For sure. You can put a user in a timeout. So MD, I just want to let you know that inappropriate comment got you in the timeout box. It says MD was blocked for 5 minutes. I never had to do that before. That was kind of cool. You're not saying kind things, MD, and you're going to hurt my feelings. I'm not going to hurt my feelings. Okay. For sure, Tara, if these are the numbers for debt to income ratio, like we don't want you to spend money on credit cards and change your credit profile during mortgage, but it's going to be okay. The underwriter's just going to evaluate the file. Let's say it was like clear to close, and they're like, oh, we got 4,000 she spent here, and now there's like, extra payment being showing up on the credit card. You're good. Long story short, you're good. All right, Ryan, how does rental income affect your DTI ratio? It goes on the income side. So if it's, a brand new rental and we're using 75% of the rents, or if it's a rental that's you've had for a while and it shows up on your tax return, and we do the formula to figure out what your rental income is, whatever that rental income is, you make $5,000 a month in your day job, $1,000 in rental income. So now on the income side, you got 6,000. On the other side is mortgage payment, rental property payment, plus what other debts you have, and it's just, it gets added to the income side is the short answer. Bank statement loan for purchase, like 20%. Those non-QM loans, you're not going to find them at 5% down. Those are almost all of my scene are going to be 20% down minimum. If I pay my credit cards each month off in full, will I treat it as debt, or should I pay everything on my debit card? I think you're fine, like paying it each month like that. Just know that like the snapshot in time when your credit gets pulled, that's when they're going to if you're going to qualify with that debt on or not, it doesn't matter if you've got a $386 balance on your card or a $1,400 balance. And so I wouldn't necessarily worry about it if for whatever reason the qualifying is really close and all of a sudden it's like, oh, we've got to pay off the Discover and the Home Depot card to get you to qualify. Then it's like, all right, don't charge anymore on those, pay those off so that you can qualify for the loan. But I wouldn't sweat like not charging and putting everything on your debit card, because it more than likely it's not going to affect whether you qualify or not. Great question, BOJIM. If 401k loans don't show up on credit reports, do you have to disclose it in applying for loans like refinancing mortgage? Say 401k loan repayment is $900 a month for 5 years. This has come up quite a bit. And I remember the conversation I had with my production manager, because a 401k loan is like, I've got 200 grand in my 401k. I'm going to borrow 100 of it, whatever you do with that, right? I'm going to pay myself back. In this case, $900 a month for 5 years. You're borrowing your own money, or if you stop paying that 900, you just have a lesser balance in your 401k. With that in mind, we're not counting it on your debt to income ratio, because it's not a debt where, like, sure, you're paying it every month, but if you stopped paying it, it would just come off of that 401k balance. So shorter answer, no. You don't have to disclose it in applying for loans. I don't think there's anywhere that's asked. So don't sweat it. You're not going to be hiding anything from. It's just not a question on the statement. What's up, Scott? You took a 40-year loan modification. When can I refi my rental home? So you took the 40-year loan mod on your primary, I think is what you're saying, right? And you want to know when you could refi your rental property. I wonder how that shows up. You might have to. I don't know the answer, Scott. My thought is that you might have to be out of that trial period and paying towards the new mortgage before you can refi your rental property. Like exiting forbearance is one thing, and then like as soon as you exit forbearance, a lot of lenders will allow you to refinance right away, whether it's that property or whether it's another property. With a modification, I haven't seen those come across my desk yet. So I'll try to get an answer for you. Modification. So they're having you enter into a trial period, right? And you make 3 payments, and then like after that, you'll start on the new loan. Send me some info. I'd be happy to look at it. Matt at mattthemortgageguy.com. Send it there, Scott. I'll check it out. Check out your scenario. After I chill for a few months, I want to get another property. Potential rental income from a DTI. If you buy a brand new property, you can use projected rents, meaning bought this property, appraisal was done. Along with the appraisal, they do a 1007, which is a rent survey. Rent survey says things in the neighborhood rent for $2,000 a month. Lender takes that, multiplies it by 75%, and says, all right, Riley Oak, $1,500 is what will give you, because it's 75% of the 2,000 in rental income, projected rental income. If I pay off entire balance of a rental property, that automatically increase my credit score? If yes, and how long will that improve my credit score, and by how much? I believe it will. How long? Probably within the couple months. And by how much? No idea. Sam Parker's my credit guy. He's the best of the best. He knows this stuff in detail. I'm really no credit expert. Besides saying like, yeah, that is going to increase your credit. I don't think it's a ton, right? So I wouldn't expect it to have move the needle a ton. No problem. No problem. Adrian Ortiz. Hello. My lenders qualify me putting 10% down on a bank statement loan. Is this true? Maybe. I haven't done as many bank statement loans recently. And really it's like a niche product where everybody's doing it different. There's 20 different non-QM lenders I can broker to, and I wouldn't be surprised if there's one doing 10% down. I wonder what are the terms pretty shit? Let me know. Kia, what do you think of owner finance? I think it's awesome. As long as the terms are good. If they're charging you 6% interest and 5 points up front, that's no bueno. But yeah, if for whatever reason the owner wants to do owner financing, then yeah, I mean, look at the terms. That would be my best bet. Is like, if you're talking to a honest mortgage broker, if someone came to me and said, hey, this is what the owner's offering me, and I look at it and it's like, 3%, they don't have to pay any of the fees they'd have to pay if it was a loan through a broker or bank or something. And I'd be like, I'd probably do that if I was you. If the terms are 5%, then not so much. Oh, you know what, Adrian? Did I ever get back to you on that 270-day lock? My office manager sent me that. Said that you had pinged us back. How expensive is that 2.75? That's what I want to know. Can you get a loan estimate that says like 2.75? If they're charging you 2 points for it, it's expensive AF. If there's no points for that 2.75, it's smoking. I've talked to multiple lenders. It seems that only big banks do builder loans, new construction loans. No, I mean, all lenders do those loans. I've got a 270-day or 360-day lock. It's just expensive as heck. Send me whatever you have on Points was 360. That's smoking. I mean, that's good. Yeah. I mean, I'm gonna say with that information, I'd lock that thing up. Lock it up, man. 270-day loan lock. Do it. Pro Cons asks, can the loan origination fee be negotiated? Usually not. I mean, generally speaking, like there's no real loan origination fee. Like if I broker a loan, I've got admin fee paid to the lender. I've got processing, I pay it. So it's zero for the borrower. And then loan origination or points is just based on like you and your scenario. 2.875 is free. 2.75 costs $1,500. 2.625 costs $3,000. 2.5 costs $4,700. And so it's not like you can negotiate that. You can talk to a broker and look at that pricing and then talk to a bank and go, oh my gosh, more expensive and it takes longer. No, thank you, ma'am. We talk to Matt again. I'd be lying if I said there's not a little bit of room for negotiation, but I wouldn't necessarily like. Maybe. Final answer. Seller said most is 2.9 interest rate for 30 years. What do you mean most? If they're doing 2.9, just make sure it's fixed, make sure it's the whole balance. But yeah, sounds good. I guess what I would wonder is like the terms of it, right? Like maybe it works out best for them too because they don't want or need all the cash at once. They want it kind of like an annuity. So yeah, maybe it's good. Maybe it's good for everybody. I like this, Augustine. Find out who they're sending that bank statement loan to, because that's pretty good for bank statement loan. 4%, 10% down, no points. Is there mortgage insurance? My guess is there probably is. All right, MD. I think you're done. Had to do it. Saying offensive stuff, MD. Not cool, man. Internet is a cruel place. Talking mean to me. Can you believe it? All right. If my income for 2020 is 50K and for 2021 is 100K, both on W-2, does that mean my income will be 75K for mortgage? Does the big difference matter? If it's variable pay, then it's going to be an average like that. But with W-2 income, if you got a pay raise and it's consistent, like now all of a sudden you're in a position that's $8,333 a month, like you're salaried at 100,000, we can use that right away. And we see your pay every single 2 weeks, 4166. I think that's what like the bi-monthly pay is for somebody who makes 100 grand a year. It's like 4166. If we see that and you show like, all right, I got a promotion in December of 2020, now I'm making 100 grand a year, we'll use that 100 grand. The only time it gets averaged is if it's self-employed or if it's variable pay. I've got nurses that I work with and they, the pay is hourly. The hours vary from week to week. Unfortunately, we have to use the variable pay, even though the new job in the intensive care unit is $80 an hour. We've got to look back when you're only making 43 or 52 and an average 1920 in the 2021 year to date. So that is the short answer. Hope that helped. Kraler Made, my dude. Uh-oh. Here you go, Kraler Made. You're off and running, man. Thanks for your support, dude. I appreciate the super chat. if you want to check out a really cool channel, go check out my buddy Krayler Made. So preliminary loan docs, meaning like you've got like a CD or something out probably to sign. Appraisal better happen real soon if you're closing in 2 weeks. But my guess is that it already got submitted to underwriting. Let me show you something, Krayler. Shoot me an email too. I'll send you this because this should help. Oh, a pre-CD loan. And sometimes I get lost in my own Dropbox. Loan process. Bear with me while I try to find. I have a document where, gosh, I can't find the new one. I'm finding the old one. How do I sort these by date? Sort by, oh, there we go. Date. What in the world? Loan process. This ain't it. Son of a gun. All I'm finding, Krayler, is some old ones, but I'll share this with you. I've got a newer one that's better, so I'll find it. But like, you got your initial disclosures, the appraisals ordered, your file submitted underwriting, and now like they're underwriting the file. We're waiting on the appraisal. You should get your approval, and like with that approval is conditions. That's why it's called a conditional approval. All right, we need, your latest month's bank statement. We need a letter of explanation on what this deposit was on this date. We need you to, provide your business license, whatever the heck it is, right? Like those things. You submit those final conditions into underwriting. You get the appraisal back. That gets submitted. Final approval. You get the closing and disclosure. Then, final docs are sent to title. You sign those, and then you fund and record. This is kind of the gist of it. This is an older one, kind of a ugly looking roadmap. I got a prettier one that I just can't find because I'm not that smart with computers, how to work Dropbox. But anyhow, that's kind of the gist of it. I would ask the lender like when you're going to get your approval, because for anybody who's self-employed, like that's huge to know, like, all right, I'm approved. And when you get the initial approval, you'll be able to see, is there anything on here I can't provide? Because really, like, once you get a conditional approval, it's like, okay, we can get the loan done as long as you can provide these things. Sometimes like 3 or 4 things are super easy. I'll tell the listing agent and tell the buyer, we're all good. Just provide these things. We'll turn them in and we'll be good. Sometimes it's like, they're asking for stuff I don't know if you can provide. That's going to be tough. So anyhow, that's the gist of it. Shoot me an email if you want me to dig up the newer, better looking like loan process, which should be similar to most what any lender's doing. Al Bundy, good to see you. Do mortgage brokers have any loans for flipping properties? Here's what I'm going to say. You guys come to this channel for good, honest advice. Hard money loans, fix and flip loans, all this stuff, like you're best off using somebody who like that's all they do all day, every day. I've got hard money lenders I refer out all day. Can I broker hard money as a broker and get paid on it? Sure. Is it in your best interest for me to get a spiff and get a point or a point and a half off a deal you can go straight to the hard money lender for and just get it that way? No. So yeah, you could do it with a broker. I would probably say, the flip stuff, you get a good enough deal where a hard money lender will lend you the money because they're going to underwrite it. And if it's not a good deal, they're going to tell you to, go fly a kite. and then refinance it with a conventional lender once you've rehabbed it and you're holding it. Or if you're flipping it and selling it, then you just flip it and sell it. And you got to do it fast so you don't pay the hard money lender too much, because that money is expensive. Thank you for the $2 super chat. Much appreciated. Yeah, so you're saying it was a pre-CD Krayler and 56 pages long. Only thing you really need to worry about on any of those loan disclosures is the 2 or 3 pages of loan estimate or closing disclosure. All the rest is just compliance crap, to be completely honest. Look at the numbers and make sure the numbers line up with, like, okay, they told me this rate and this cost. Make sure there ain't no funny business in them numbers. That's all. Hello from OC. How you doing? Kimberly. Yes, twice a year, November and April for property taxes. I think you meant November 20 or 21, but basically twice a year, every 6 months. All right, I have 100K in debt. Is a good idea to refinance and cash out? It all depends. If you've got a ton of equity in your house and your first mortgage isn't already locked into a smoking interest rate, it might make sense to do a cash out refinance and pay off the debt. Depending on what your credit score is. There's some people, it can change your friggin' life. Maybe on that 100,000 in debt, you're paying $1,800 a month between this credit card, that car payment, this, secured installment loan you took from the bank. It's a lot of debt, right? And so let's say you owe 152,000 on your home loan and your house is worth 500,000. My guess is that you can refinance and pull 100,000 out, still be in a great equity position, get a smoking rate. When your loan to value is less than 60%, the rates are smoking. Even with not so good a credit, the rates are smoking. And maybe your mortgage payment goes up by $350, but you've been paying $1,800 a month on this other debt. Somehow you've been making it work. So maybe you take $1,000 a month, since you're now saving $1,550 compared to your old, or what did I say, $350 more versus $1,800, so $1,450. Maybe you take 1,000 of that, and depending on your priorities, either stick it in the mortgage and pay the mortgage off in 17 years, or you pluck it into an investment account and you close your eyes and look up, and in 10 years you've got $200,000 because you've invested 120 plus it's gained interest. It's probably worth more than that, right? Yeah, it's probably worth 280. Anyhow, my 2 cents. The loan securing process is really confusing. It's like you're never finished and there's always another thing to do. All right, so the loan officer checked with the underwriters, see if they could do the loan, and they said they could. He asked for the typical personal documents and sent a 56-page document to sign. Yeah, I mean, it's basically just a loan estimate. I bet in there's loan estimate among all that other crap, right? Is my screen still dark? Or was it just when I tried to share something? Can you see me now? Where did I leave off? Yeah, try to get whoever you're working with to communicate as much as possible. It might seem like a never-ending process, Krayler, but I promise you it's just like, it's a process, right? They're trying to secure hundreds of thousands of dollars for you to buy this house. The lender, especially for somebody who's self-employed, is going to want documentation. and lots of it. And, a lot of I's to dot and a lot of T's to cross, but wish you the best of luck, brother. Are the last 3 pay stubs going to be average and they'll be considered my monthly income? I don't know if I got, where was the first part of this question? That's weird. I didn't see the first part of that. But your monthly income, depending on how you get paid, hourly, salary, self-employed, W-2'd, definitely not averaging 2 or 3 pay stubs. Nothing like that. If you're salary, we just take your salary, $52.75 a month. If you're hourly, and it varies, we're going to take 2019, 2020, year-to-date 2021, average all of that. A lender who's lending someone hundreds of thousands of dollars not going to be like, oh, last 2 pay stubs made about $1,750 a week. Sounds cool. Let's give them $7,000 a month. They're looking at a longer history than that. All right. Augustine. Refinancing your primary. I'm locked in at 2.5, 30-year term, no points. 760 loan amount, 760 FICO. You're saying, can I get a better rate somewhere else, or should I just take it? I want to see the loan estimate from Rocket. I don't trust them as far as I can throw them. And so, yeah, shoot me an email, matt@mattthemortgageguy.com. Oh, you're not working with them directly. You're working with a mortgage broker. Okay. I don't want to step on a mortgage broker's toes, but depends on, value. If you're in my guess is that you're in a high balance county where that's still a conforming loan. It's a pretty good looking loan. I'd love for it to go somewhere else besides Rocket, but that's my personal preference. So, yeah, I mean, if you like who you're working with, you trust them. Part of me says go for it. The part of me that dislikes Quicken Loans says find a broker that will send it somewhere else at a better rate, and don't feed the beast. For shoppable items on a refi, how do I shop for them? Do I just Google and Yelp? What should I ask? What should I look for? I think what you're referring to is like on the loan document, it says services you can shop for. Don't do that. It's like title fees and stuff like that. Like literally everybody is priced the same. To go out and be like, hey, I'm calling shopping your title insurance. How much is that over there at Chicago Title? Like, it's not the best use of your time. So I promise you, save your time and effort. It says that on loan estimates, and let me pull one up. That's not it. That's not it. Come on. Loan estimate. Oh my gosh. Bear with me. I'm trying to pull one up so that I can oh. Here we go. Oh. Services you can shop for. Box C, right? Title. Definitely. Don't want to go shop for title fees. Not worth your time. What's up, Theo? Today something got dropped in FedEx, Theo. be on the lookout. My guess, I think it said delivery by Thursday. So by Thursday, check your mailbox, buddy. Thanks for the support. Appreciate you. I don't think you can. I swear I just made a video on this like 6 months ago and I already forgot. Gift funds on a second home. Oh, maybe you can. Ha ha, you can. At least that's what Google's telling me. Okay, okay. I'm looking at Fannie Mae's selling guide. Gift funds. All right, all right. Yep, answer is yes. I just found the Fannie guide. Oh, it doesn't discuss it? Put it in the comments. Put it in the comments, and maybe I didn't discuss it because I hadn't looked it up. But now we know. Now we both know. I'm reading the Fannie Mae guide, and here's what I'm going to do. I'm going to go put it in the notes of that video so everybody can have it. Since I didn't do my job the first time around and put it in there. All right, I think I got to get rolling, guys. I think I'm tired. I think I'm going down fast. I've been up for about 16 hours. Running out of gas. I appreciate each and every one of you for joining. Really, really paste. We'll put this up one more time. The course, get it while it's hot. If you're one of the first ones in the course, I'm gonna try to hook you up with a special gift, but $97 for about $5,000 in mortgage knowledge. Best deal in town. Appreciate all you guys watching every Monday, 6 p.m. Pacific Standard Time. If you know of somebody that can benefit from good, straightforward, honest mortgage advice, direct them to the channel. Tell them to come by on a Monday at 6 p.m. Ask whatever questions they have. I appreciate the heck out of everybody who watched. See you next week. Bye-bye.